Time for Business. Kate Moody here. Started, we'll look at the US economy and another wave of layoffs, sadly, on the horizon.
Yes, Mark. 28,000 jobs are being axed by Disney, and tens of thousands more could follow in the next week. Now, a survey released this Wednesday showed the private sector had added a stronger than expected 749,000 jobs in September. But analysts say the American labor market is far from a full recovery as companies grapple with the ongoing effects of the pandemic. Meanwhile, the U.S. Commerce Department has confirmed the economy has suffered its sharpest contraction on record in the period from April to June. The second quarter growth figures were once again revised slightly downwards from an initial 32.9% to a 31.4% drop. Now, keep in mind that U.S. economic data is annualized, so it's not a strict quarterly comparison. It means that if you calculate the state of the economy, as most other countries like France do, GDP shrank closer to 9%. It's still a historic drop. The government will release its report for the third quarter, which ends today, just a few days before the election. The Bureau of Economic Analysis expects a strong rebound for the period from July to September. Well, 35,000 jobs could be slashed as soon as Thursday as federal aid for America's biggest airlines runs out. The aviation industry has been lobbying for a further $25 billion in loans or grants, but with Congress still deadlocked over a next round of stimulus, hopes are dimming. Julia Kim reports.
Back in March, the US Congress gave the aviation industry a lifeline. $25 billion in mostly federal grants. Under the Coronavirus Aid, Relief and Economic Security Act, or the CARES Act, airlines were compelled to keep their employees on payroll through September. The hope was that demand in air travel would take off over the summer. It didn't. Instead, air traffic plummeted by almost 70% compared to last year, while losses soared. The country's four largest carriers, American, United, Delta and Southwest, lost a combined total of $10 billion in the second quarter alone. Without another bailout, airlines say that massive layoffs will be inevitable from the start of October. American Airlines has announced it would furlough or fire 19,000 workers, while United is poised to furlough nearly 12,000 flight attendants and technicians. That's down from an initial target of 36,000. Delta and Southwest say they'll avoid sacking staff for the moment by tapping private capital markets. In the meantime, thousands are on temporary unpaid leave or reduced hours, while others have taken voluntary redundancy. Industry-wide, some 100,000 jobs have already disappeared. So far, Congress has been reluctant to pass a standalone measure that would only aid airlines, without assurances from employers that they would safeguard jobs.
Let's check in on the day's trading action. Wall Street has closed higher, but U.S. stocks have still racked up their first month of losses since March. Disney shares closed down about 1% after it announced those layoffs, which will be concentrated in its two U.S. theme parks. The major European indices closed lower. We saw losses of about 0.5 percentage point across the board. Shares of the French utility Suez rose nearly 6% after Veolia raised its bid for ENGIE's 30% stake in its water management business from $2.9 to $3.4 billion, euros rather. It is understood this evening that ENGIE has now agreed to sell that stake, extending their deadline for a few days more to finalize the terms. Well, the pandemic is pushing Africa into its first recession in a quarter of a century, with GDP forecast to shrink up to 5%. The World Bank is deploying some $50 billion to support African economies through the pandemic, while its private sector arm, the International Finance Corporation, has outlined a $1.5 billion facility for Africa's business community, with a focus on small and medium-sized companies. Sergio Pimenta, vice president for the Middle East and Africa of the IFC, told me that those firms, in turn, have a crucial role to play in combating the virus.
In Africa, like around the world, private sector has a significant role to play in helping the economies recover after COVID and responding to what's happening. In Africa in particular, you have to look at the opportunities that there are in terms of developing new markets, new ideas, and roll them out across the continent. I would, for instance, mention what can be done in the digital space, where Africa still has quite a bit to catch up, where you see a lot of companies really coming up with bright ideas and rolling them out and helping find solutions that are specifically tailored for Africa and for the African markets. Private sector plays a key role there, in particular when you look at the situation, the macro situation of the countries, where indebtedness entering into this crisis was already high. So when countries are already quite deep in debt, you do need the funding from the private sector to come and complement what governments can do and to really bring solutions to help people find new livelihoods, new jobs, and really a new recovery to their lives.
Mark, that's the business news for now.
Kate, as ever, great to see you, Kate, with all the business. Thank you.